Households are struggling with the cost of living as food and energy prices touch an all-time high. The rising expenditure has triggered the shift to borrowing from saving, as people are now forced to spend more than they did a year ago. According to a survey conducted by the Office of National Statistics, in March, 17% of people were borrowing more, while 43% said they would not be able to save in the coming 12 months. Among the hardest hit are those paying off a loan or mortgage. According to the data, 30% of adults are now finding it challenging to afford housing costs with rising loans or mortgage payments. Almost 19% of borrowers reported an increase in their mortgage payments in March 2022. The payments for people who secured a mortgage on a standard variable rate have increased due to a rise in the average floating mortgage interest rate, which has climbed up by 0.2 percentage points since November last year. Meanwhile, the banks have started to review the amount they lend to mortgagors, making it even more challenging for people to borrow. The tightening of the mortgage affordability tests for UK homebuyers will mean they'll be forced to reduce the size of their loans and in turn fuel a slowdown in the country's real estate market. So let's take a look at some FTSE-listed mortgage lenders and how their stocks are performing. First on the list is the Lloyds Banking Group. The Edinburgh-headquartered retail and commercial banking group is one of the largest financial service providers in the UK. The group lent over £16 billion to more than 80,000 first-time homebuyers in financial year 2021. It reported a statutory profit after tax of £5.9 billion, while its solid net income stood at £15.8 billion during the year. The FTSE 100 constituent has given its shareholders a return of 6.49% over the last year as of the 26th of April. And on the 26th of April, the company had a market cap of £31.704 billion. Second on the list is the NatWest Group. They provide financial services in multiple countries and is one of the 4 banking majors in Britain. Recently, it regained a majority stake through an off-market purchase of ordinary shares worth £1.2 billion from the UK government. The FTSE 100 listed company has given a return of 14.9% over the last year to investors, and its market cap stands at £23.07 billion. The last stock on the list is the OSB Group, a FTSE 250 listed company that provides financial services such as mortgages, saving products and credit consultancy to commercial and retail clients. The business delivered a solid performance in 2021, with its net interest income climbing to £587.6 million. The underlying net loans increased to £21.08 billion during the period. The OSB Group has a market cap of £2.538 billion. Over the year, it was given a return of 20.34% to shareholders. Now you can leave a comment below and share this video with your friends. You can also subscribe to our channel and press the bell icon to get notifications for our latest videos. I'm Rachel for Calcai Media.